Morning, guys. My name's Gareth. I'm a licensed realtor at HaliPad Real Estate, and this morning we're going to talk a little bit about today's market, but how buyers can conduct themselves in today's market and really what it means for them. So the market today, so single family homes, a few months ago they were going for crazy prices, overbidding, $100,000, $150,000, $200,000 over. So we've seen lately people are listing more for what they expect to get, which is refreshing. We're seeing less low listing prices with people expecting these high bids, which is great. And we're seeing probably houses going for more, like closer to the listing price, but also we're seeing sometimes houses reducing a little bit to get sold, which is very different from a few months ago. So the biggest difference, I would say, it's still very much a seller's market, but the biggest difference is that there are less multiple offer situations. So I'll talk a little bit later about why I think that's happening right now. So that's single family homes, but condos are even a little bit different. We're seeing them reduce in price more. There's a little bit of a stall maybe in the market, if I can use that term. There's a lot more product on the market. It's not moving as quickly, definitely as single family homes, definitely as before. It's not moving as quickly as before. And a lot of condos, for example, I just had one list, have to reduce a little bit in price. They're just not getting as many offers as they were before. That doesn't mean that I think that either of these are bad investments today. So buyers can still look at the market, they can still find homes and still get good return on their investment. But what it does mean for buyers right now is that they have a little bit more negotiating power. They have a little bit more room. So when they don't need to bid $150,000 over. They don't need to be terrified that there are 10 other people bidding on this house and they need to throw out their entire max budget. They can go in and go, oh, okay, well, we hear there's only 2 other people, there's only 1 other person bidding on this house. Maybe I'm the only one. Well, then you can bid at list. Maybe you can bid a little bit below list. But then if there's 2 or 3, you can just bid a little bit above. You can make your bid competitive without having to throw out all of your financial means. It also means that you don't have to sacrifice on conditions as much anymore. So you don't have to do away with financial necessarily to make your bid competitive. So it gives you a little bit more breathing room, a little bit more negotiating power, which is great. It's fantastic. So the main reason I think that the market has changed a little bit for buyers is that there's a lot of uncertainty in the market. And I think that comes from a couple of different sources. First, I would say that I often get the question, is this a good time to buy, right? People are concerned, are the prices going to keep going down, right? Are they going to go back up? Well, we don't really know. I mean, trying to play that guessing game, you can make an educated guess, but it's still a guess at the end of the day. So we can't predict the future. So what does that mean? One, you need to ask yourself the question, do I want or need to buy a house? If you don't buy a house. I mean, I don't know why you would be looking in the first place. But 2, does it make financial sense? Okay, this should always be the question, right? Not, can I make a bundle by buying now and selling later? Can I make, or will I lose a bunch of money in the future? Does it make financial sense for you today? Which leads me to the second part of what I think is driving the uncertainty in the market, and that's all this talk about interest rates. It's in the news, it's everybody you talk to on the street. We're all terrified that the interest rates are gonna go up. So what does that mean? Okay, well, first, talk to a mortgage broker. All right, they know far more than me, and they'll be able to tell you kind of the forecast of things. But when I looked this morning, I looked at the rates. TD Bank is 3.3% on a variable rate mortgage. That's amazing. That's lower than my current fixed rate mortgage that I locked in a year before the pandemic. So that's still a great rate. All right, that's still completely financially viable. And I will say that I've had a rate working as a teacher with a low salary. My wife was working as a teacher, low salary, and we had a 5.5% mortgage rate, and we made it work. So it is doable. It won't last forever, okay? And rates will go up. They might go back down. We need to talk to the professionals to find out exactly why, okay? Fear is best defeated by knowledge. So, talk to your experts, find out exactly what opportunities are out there for you, and find a realtor you trust. And I hope it's me. Otherwise, thanks for listening, and be sure to like and subscribe.